In this lecture, we will be looking at the stock exchange, where nearly everything stock-related happens. I say nearly because there has recently been a huge shift to online investing without the actual use of the physical exchange. We will come to that later. We will also be looking at the different types of markets, the primary, the secondary, and the OTC, or over-the-counter markets. The stock exchange is an exchange for stockbrokers and traders to trade stocks. The function of an exchange is to ensure fair and orderly trading, as well as the dissemination of price information of any stock on the exchange. The exchange gives companies a platform to sell their stock to the investment public. In order to trade a stock, it must be listed in the exchange. There usually used to be a central location for record keeping, but it is currently becoming less linked to a physical place as markets are now electronic networks, which gives the advantage of speed and reduced costs for transactions. The trading on the exchange only happens with members, so brokers and dealers, basically. When a company chooses to go public, they go through an IPO, which stands for Initial Public Offering. This process is done in the primary market. The primary market is the market that issues new stocks on the exchange. It is facilitated by what is called an underwriting group, which is basically an investment bank that sets a beginning price for the stock and sells it to the investors. Once the IPO is done, the actual trading of the stock happens in the secondary market, which is the stock market. In addition to the primary and secondary market, there are also the third and fourth markets. They aren't as important because they don't concern the individual investor. All they do is make market transactions between brokers and dealers, as well as large institutions, through what we call the OTC market. The OTC market is a decentralized market, which means that it doesn't have a central location. The transactions occur through various communication modes, such as through the telephone or by email. OTC markets are much less transparent and are subject to fewer regulations. Let's take a look at the history of the exchange. The first real company that issued shares was the East India Company. The shares were issued on paper, so investors could then sell the paper to other investors. At that point, though, which was during the 1600s, there was no real stock exchange in existence, so investors would have to track down a broker to make a trade. In London, though, brokers and investors would meet and do business in coffee shops. The first stock exchange in London was created in 1773, 19 years before the New York Stock Exchange. At that time, though, the London Stock Exchange was forbid to deal stocks, while the New York Stock Exchange could from the very start. The New York Stock Exchange actually has a rather interesting history. It was formed by brokers that used to deal under a buttonwood tree, which was located on Wall Street. The reason why it grew to be the most powerful exchange was because of its location. It was in the heart of all business and trade coming and going from the United States, as well as the base for most banks and corporations. Back in Europe, the London Stock Exchange emerged as the leading exchange in Europe. Exchanges are located all around the globe, with some of the more famous ones being the New York Stock Exchange, the NASDAQ, and the Tokyo Stock Exchange. The New York Stock Exchange is primarily auction-based, with specialists being physically present on the exchange trading floor. Each of these specialists specializes in a particular stock, buying and selling it in the auction. There is an ongoing rivalry between the specialists and the electronic-only exchanges that claim to be more efficient because they are able to execute trades much faster by eliminating human intermediaries. The NASDAQ is another large exchange in the US. It is an electronic exchange and sometimes called screen-based because buyers and sellers are connected only by computers. To sum up everything, we looked at how exchanges work as well as their history. We also looked at the functions of the primary, secondary, and OTC markets. So, I hope you enjoyed it, and thank you for watching.